What's happening on copper concentrate supply? Concentrate supply lagging behind smelting capacity. Rapid expansion of smelters, especially in China, India, and Indonesia, has far outpaced mine output. That mismatch has created persistent deficits in copper concentrate since 2024, expected to deepen through 2025 to 27. Smelters paying to process concentrate. Treatment and refining charges, fees paid by miners to smelters, have collapsed, even entering negative territory, as low as $45 per ton, meaning smelters essentially pay miners just to secure feedstock. Smelters reducing production or idling. Many have already scaled back operations. Example, China's top smelters shut down 8% of capacity in March 2025 to ease tight supply and cut losses. Others, like Namibia's Tsumeb smelter, have halted activity due to concentrate scarcity. Global repercussions. Price volatility and backwardation. Copper prices spiked, e.g., north of $10,000 per ton, and spot contracts are now pricier than futures, a classic sign of market tightness. Smelting crises in the West. Rising energy costs and thin margins threaten smelter viability in places like Australia, Namibia, the Philippines, and Europe. Strategic vulnerabilities for emerging industries. The UN warns that copper shortages could impede the energy transition by stalling EV rollout, grid upgrades, and governments, e.g., India, are scrambling to secure concentrate supply or build domestic smelters. Key drivers. Smelter overcapacity. China added smelting capacity at double-digit rates, 11-14% YTD in 2025, while global mine production rose only 1-3% annually. Mining setbacks. Projects like Panama's Cobre and DRC interruptions have restrained concentrate production. Declining ore grades. Lower ore quality means less concentrate per ton of mined ore. Long project timelines. Developing new mines takes 7 to 10 plus years, while smelters can be operational in 2 years. Outlook and potential easing. Slow supply relief. Around 56 new copper mines are expected by 2030, which might finally ease concentrate tightness, but not quickly. Smelter shutdowns. Continued closures or idle plants, like Sinamine in Namibia, could rebalance supply-demand. Unprecedented copper concentrate market tightness has prompted negative treatment and refining charges, TCRCs, for the first time in history. This remarkable supply shortage has shifted power from smelters to miners, with Japan's JX Advanced Metals already announcing significant production cuts due to stringent terms and conditions in supply contracts. Industry analysts predict a domino effect of production curtailments across global copper smelters, particularly affecting those without integrated mining operations. JX is strategically pivoting to strengthen its metal recycling business to reduce dependence on primary concentrate supplies. The implications extend beyond immediate market participants to downstream industries including electrical equipment manufacturing, construction, automotive, and renewable energy sectors. How might this copper concentrate shortage impact your investment strategy in the green energy transition? The copper concentrate market is in an unprecedented position at the moment, with copper TCRCs at all-time lows. Broad smelting overcapacity, among other factors, has led to the extreme tightness that doesn't seem to be nearing an end. Concentrate mid-year discussions are ongoing in the market with expectations that any mid-year deal will be well below annual levels. Was good to chat to Camilla Hodgson on this and glad to see this interesting topic covered in the foot. Professor Babu envisioned a network-first model, an agile, digital-savvy agency that would do one thing better than anyone else: connect African suppliers with real Chinese buyers. The first break in 2025, XYB Global Traders, Shanghai Limited made its first big move, signing a copper offtake agreement with a small but high-grade mining operation in Tanzania, DRC, and Zambia. But the challenge wasn't the copper. It was the Chinese buyers. In Beijing, Shanghai, Ningbo, and Lebanon, Smelters were tired of fakes, brokers, and long chains. They wanted direct access. XYB Global Traders, Shanghai, Limited delivered. Through a relentless series of face-to-face meetings, tea-house negotiations, WeChat introductions, and cold call pitches, XYB Global Traders, Shanghai, Limited locked in memorandums of understanding, MOUs, with 2 independent smelters in Jiangsu, a cable manufacturer in Hebei, a mid-tier cathode plant in Sichuan, a SOE-backed logistics partner in Tianjin, the great matchmaking unlike. Traditional trading houses, XYB Global Traders, Shanghai, Limited acted as a trust bridge. Every African mine they onboard, big or small, was vetted via a 3-layer due diligence process. Photos, SGS reports, site visits, and drone footage. Then, Chinese buyers were offered real-time cargo previews, lab reports in Mandarin, and terms aligned with Chinese customs and safe, foreign exchange, rules. Buyers loved the XYB Global Traders, Shanghai, Limited transparency. Suppliers loved the demand. Soon, XYB Global Traders, Shanghai, Limited wasn't just brokering. They were building trust. Crisis and credibility in 2025, when copper concentrate prices spiked and fake traders flooded the market, many deals collapsed. Chinese buyers lost millions. But XYB Global Traders, Shanghai, Limited stood firm. Their cargoes landed. Their partners were paid. And their credibility soared. A senior procurement director from Jiangxi Copper privately said, "We have Zhengyu Zhenxian, Shanghai, Mineral Products Company, Limited. We have Hubei Global Union Company, Limited. But XYB Global Traders, Shanghai, Limited, they bring us opportunity with trust." The network expands by 2025. XYB Global Traders, Shanghai, Limited had built a cross-China network of 27 verified buyers, smelters, processors, refiners, and manufacturers. At the same time, they secured supply partnerships in Democratic Republic of the Congo, Zambia, Tanzania, each deal powered by WeChat rooms, Mandarin-speaking agents, and a 24-hour logistics desk in Shenzhen. The rise of a quiet giant today, XYB Global Traders, Shanghai, Limited doesn't shout. It doesn't host glitzy conferences or publish glossy reports. But its copper flows into China every month. Verified, cleared, paid, delivered. African suppliers now say, if you want a real buyer in China, talk to XYB Global Traders, Shanghai, Limited. On LinkedIn are red line snakes across the globe, from the copper belts of Katanga to the industrial cities of China. It is not just a trade route. It is a thread of trust, woven by XYB Global Traders, Shanghai, Limited.